All right. Okay. So here you are, where you have to calculate the tax liability on an unmarried head of household with 2 children, gross income of $45,000. There's no adjustments. The deductions are $4,858 for state tax, $3,000 theft loss, and then $1,000 tax credit. So what you want to do is start with the top number, the gross account, the gross amount. So you want to, okay, write that down. And then the other thing I want to show you is this, okay? Right now you're just brainstorming, okay? And when you're doing the brainstorming, go to the marginal tax table. Okay, let me see how I can maneuver this. Okay, I'm gonna go over here. Maybe not. Okay, oh, there it is. Okay, so that should work. Okay, so over here, if you look carefully under the deductions, you have $4,858 plus $3,000. If you add these two amounts from the deductions, you're going to get $7,858. You want to compare that to the standard deduction. When you're doing these tax returns, for the deductions, either you take the standard, which is what the government allows, or you go ahead and take the itemized deduction, which is what your list is, what you come up with, okay? So what this person is coming up with is $7,858 versus the standard at $9,300. Which one is the larger amount? Which one is the better number that's going to help you pay the lowest taxes possible? That would be the standard deduction. So for this person, you're going to have to take the standard. Either you take the standard or you do itemized. You cannot do both. So we're going to take the standard. So this means you cannot utilize these two numbers right here, okay? You just throw them out. Those numbers don't count as part of the problem, okay? Now, additionally, when you're doing these tax returns, every individual on the tax return is allowed to take an exemption of $4,050. This tax return is for an adult, a head of household with 2 children. So you count the head of household plus the 2 kids, that's going to give you 3 individuals on this tax return. So then the exemption would be multiplied by 3. All right. So now that we've done all this brainstorming, we're ready to go ahead and start doing some computation. So on this one for the computation, we're going to start at the top with the 45,000. My pen is not writing right now. So let me go ahead and grab it again. Hold on a second. Come on. Okay, so guys, here we go. 45,000, okay? That's the gross. There's no adjustment, so we don't worry about the adjustment. So we're going to go ahead and reduce this amount by taking the standard deduction of $9,300. I'm going to call this the SD for standard deduction. Then we're also going to take our exemption. The exemption is per person. This tax return has 3 individuals on there because it's an unmarried head of household with 2 kids. So $4,050 times 3 for each of the individuals on the tax return, okay? Now, we're gonna go ahead and put all of this into the calculator. 45,000, we're going to subtract the 9,300 and subtract the 4,050 times 3. So that brings this amount down to $23,550. This amount right here reflects the individual's taxable income. Let me try and write taxable income, okay? In other words, this is the amount you use to go to the tax table and calculate the tax liability. By the way, this person is going to end up in the 15% tax bracket. How do I know that? I go to my tax table. Okay, now notice on this one right here, let me slide it over so you can see it nicely. Okay, right there, unmarried head of household. Okay, the $23,550 taxable income is in this bracket right here, right there, the 15% tax bracket. So for this person, they're going to have to pay 10% on the first $13,250. And then whatever's left out of the $23,550 after they pay on the first $13,250 is the amount that is going to be taxed at 15%. So here we go. When you're calculating this tax liability right here, you're going to do, okay, 10% as in 0.10 times the 13,250. Okay, so this person's going to pay 10% of the first 13,250 they've earned. And then plus they're going to pay 15% on the remaining amount from the, okay, wait a minute, I'm making a mistake here, right here. 15% on the remaining amount from the 23,000, guys. So we're going to take the 23,550, subtract the 13,000 she's already paid taxes on to figure out how much she has left to pay taxes on at 15%. 13,250. Okay. And then you're going to go ahead and grab a calculator. Guys, put that into the calculator. Put it into the calculator. So on the calculator, when you do 0.10 times 13,250, that's going to leave you with 1,000. Let me write it down here. $1,325. Okay, so she's going to pay $1,325 on the first $13,000. Then on the remaining amount from the $23,550, she's going to pay 15%. So this is how much she's going to be paying at the 15%, $1,545. $1,545. And so now, okay, you add these two amounts together. Her total tax liability is going to be $2,870. Okay, so let me see. I'm looking for a good spot too. Here, I'm going to get rid of this because I don't need that table anymore. All right, getting rid of it. All right, so now the tax liability for this person, $2,870. $2,870. That's how much taxes this person should have paid for the year, okay? But wait, there's more. Here's why. Because this person has a tax credit, and the tax credit is for $1,000. And pretty much the tax credit offsets the amount of taxes you're paying for the year. So it's reducing the amount of final taxes you owe for the year. So you're going to subtract the tax credit. And so this person ends up with $1,870 they should have paid for the year. And that's the bottom line right there. Notice, guys, the last step, the last part of this problem is the tax credit. If there is a tax credit, that's the last thing you should apply to the tax return. And that's it. Any questions?
No, thank you so much for staying later for that. It definitely helped me.